Hello, and thank you for tuning in to the MacDesk Floor Report for Thursday, January 19th. I'm Rebecca Darst from the MacDesk, speaking to you from the world-famous floor of the New York Stock Exchange. We came into the session with fairly solid gains in the futures, aided by some better-than-expected earnings, inline CPI, and a surprising decline in weekly jobless claims. Now, we've seen some give back in those, or some wobbling rather, in those initial gains, with some analysts pointing to the jobless claims number, which came in near a four-year low, as the result of seasonal factors and a government holiday that may have distorted the decline. Equities also wobbled a little bit after the Philly Fed Manufacturing Index came in very modestly better than expected, but with no great shakes, at a reading of 7.3 in January, up from 6.8 in December. Now, we were hugging the flat line for much of the morning, although we're now up about 26 points in the Dow and up 5 in the S&P. This has the S&P testing a resistance level up to 1312, which marks the trend line of the summer 2011 highs. If we can sustain a break above 1312, we'll be looking at the next resistance level in the 1316 to 1318 area. S&P sector leadership this morning is coming out of the financials, and there are two large cap names we can thank for this, namely Bank of America and Morgan Stanley. Bank of America is up nearly 5% and trading above $7, and Morgan Stanley is up better than 5%. The strength in the financial space this morning pushed the financial sector ETF, that's the XLF, to 1404. This represents a break above the 200-day moving average for the XLF, a technical level that has been a particularly stubborn area of resistance for the XLF over the past few days. Today we gapped above it, and that's likely drawing some of the momentum crowd into the fray today. Next level of support we'll be looking for in the XLF dates from late October in the 1420 area. Now, it's worth noting that Bank of America is a top 10 holding in the XLF. Morgan Stanley is not a component, but another note on those numbers. Late yesterday, in the final hour of trading, we noted some fairly aggressive sweep buying activity in the options market, with traders picking up Morgan Stanley's January $17.50 and $19 strike calls, paying 43 cents rather for the 17.50s and 4 cents for the 19s. Today, with the stock up sharply on numbers that were better than the market was expecting, those 17.50s are already performing very nicely, having doubled in value in just the first hour of trade today. VIX is down about 1% at 2065. That's around a 6-month low for the VIX, although in VIX option trading, we're seeing some early buying interest in February 37.50 calls. Over the past few days, we've been seeing very large accumulations in deep out-of-the-money February and March VIX calls. Option traders taking advantage of the lull in volatility to lock in some protection on those geopolitical and macroeconomic specters that continue to lurk just off stage in this market. But for now, we're trading to the upside on earnings, and that's good enough for us. We'll take it. For additional market insights, be sure to check your inbox at 1 p.m. for the midday. That's it from me, Rebecca Darst, for the MacDesk Floor Report.